Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 4th of May, and we're discussing the Thomson Reuters World Silver Survey 2018, published last month. Just as a brief background, the World Silver Survey has been published annually by the Silver Institute since 1990. The survey is sponsored by a number of silver and precious metal mining companies, such as Fresnillo plc, Pan American Silver, Wheaton Precious Metals, Barrick Gold Corporation, and many other well-known brands in this area. It is seen as one of the more authoritative sources of what is actually going on in the world of silver demand and supply. In summary, last year saw the fifth recorded silver market deficit in a row. A deficit of some 26 million ounces was recorded, with mine supply falling by 4%. To put this mine supply fall in context, though, it follows 13 consecutive years of annual increases up to 2016. Physical demand contracted by 2% in 2017 due to a fall of some 27% in coin and bar demand, falling from 207.8 million ounces to 151.1 million ounces. This is now the second consecutive annual decline in coin and bar demand, falling from 292.1 million ounces in 2015 to 151.1 million ounces in 2017. Now, this may surprise many listeners who hear the gurus constantly claiming that physical silver demand is rising and off the charts, with record sales in silver eagles, etc., etc. This simply is not the case, and perhaps, to use a now well-known expression, they are peddling fake news. Many reasons have been given for this fall in demand, including increased revenues moving into equities and a transfer to Bitcoin and other cryptocurrencies. Also, to some extent, the fear that higher interest rates may also reflect badly on both gold and silver prices. On a positive note, jewellery demand rose by 2%. Silverware by 12%, and industrial fabrication by 4%. In fact, the interesting factor here is the ever-increasing use of silver for industrial purposes. In 2017, demand for industrial fabrication represented some 70% of mine supply and 60% of total silver supply. This compares with 2016 of 65% and 56% respectively. One of the main reasons for this is that photovoltaic demand rose by 19%, driven particularly by solar panel usage, mainly by Chinese households. So mine supply is down 4%, with total supply down 3.7%. Coin and bar demand is down 27%, with total physical demand down by 2.3%, resulting in a physical deficit of 26 million ounces, and once factoring in ETP and exchange inventory build, a total deficit of 35.2 million ounces. The average price of silver fell from $17.14 in 2016 to $17.05 in 2017. So what are we to make of these figures, and what do they tell us about the future? Well, first of all, we should not be surprised to have seen little change in the average silver price. Now, for years, people have been screaming manipulation, and whilst we have some sympathy here, basic economics tells us that if supply equals demand, then price is likely to remain constant. A deficit of 35.2 million ounces is tiny if one considers that even the most conservative assessor values above ground stocks of silver with almost immediate access at around 1 billion ounces, with a fair number quoting closer to 2 billion ounces. So a continuous 35 million ounce deficit can be arguably catered for over the next 30 years before supply becomes imperiled. Now, we're not advocating that because, of course, any continuous deficit will, of course, cause prices to gradually increase. But with industrial usage now accounting for 60% of total supply, and frankly, little on the immediate horizon for this to increase significantly further, unless, of course, you believe that the world economies are going to grow well above its current 2 to 3%, then the only factor likely to affect supply in any great numbers is a rise in demand for investment purposes. And we have seen these figures actually falling recently. Now, what we are revealing is nothing revolutionary, and the pumpers who buy and sell precious metals know this. Therefore, they are constantly pushing the doomsday scenario of imminent economic collapse as a reason to purchase silver, as frankly, without such an event occurring, silver prices are likely to remain range-bound for a number of years. Yes, prices may creep up slowly, but only the long-term investor or accumulator is going to place their hard-earned dollars, pounds and euros into silver if they believe that it will hold value and provide a positive return in years to come. Those who are relying on economic collapse in the very near future may be disappointed, as the pumpers have been pushing this message since 2010, and we have all seen what has happened to precious metal prices since then. Before we finish this video, it's worth briefly mentioning the gold to silver ratio. Since 2010, it has increased steadily. Even in 2016, when it retreated slightly mid-year to 71.4 to 1, it still averaged 73.4 to 1 for the full year. The average for 2017 was 73.9 to 1, with the end of 2017 standing at 77 to 1. Today, it stands at 79.78 to 1 and has exceeded 80 to 1 a number of times already this year. Now, the Silver Institute actually suggests in its commentary that perhaps an economic crisis may be on the cards or is looming, but seems to suggest that based on historical behavior, gold would be the first to rise in such a situation, as people hedge their investments towards gold first, and we, quite frankly, would tend to agree with them. That said, on an historical basis, silver represents excellent value for money, especially when compared to gold. However, in the event of a crisis, gold is likely to be the initial beneficiary, and silver following thereafter. Our take on this situation is simple. Long term, silver is very attractive. Short term, it has many obstacles to overcome, but we should see slightly appreciating prices. Only a major political or economic storm, or a war, or our proverbial black swan event have to occur before we may see silver back to its historical highs of $50 an ounce. In the meantime, for physical collectors, look upon your hobby and collection as a 10 to 20 year investment program, and only save in the knowledge that you are not likely to need those funds in the very near future. That's our take on the situation, and since we started our channel, we have not been far out with our predictions so far. A few percentage points out, yes, but since the beginning have stated that the world's banks and governments will stave off a global financial meltdown for many years to come. We hope you have found this video interesting and informative,
And if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated regularly, can be found at facebook.com/IlluminatiSilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.